everybody. I want to welcome you out tonight to the Dr. Carr webinar. Thanks for coming. I also want to say thank you. We had some technical issues. If you're watching this on YouTube or whatever, we had some technical issues. And we're starting it a little bit late, actually 20 minutes late. We had 58 people, and every single one of you stayed for 20 minutes to hear Dr. Carr's talk. That's awesome, guys. Thank you for sticking around with us. Let's go ahead and get underway. So, today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So. Tom Carr. What shall I say about Tom? Tom is a fairly unique in terms of when it comes to MetaStock add-ons. He came down to my home office when I was living in California, and we actually developed his add-on for the most part in my clubhouse. I had a little just shed-like separate building, and we kind of sat down and hammered some. All of the work that he'd done into MetaStock scans, explorations, and codes. It was a lot of fun. So the unique thing about it is it's the only add-on that's been entirely developed in California, I would say. So in any case, when we were creating we included all of the trading strategies Dr. Carr had in his best-selling books, Trend Trading for a Living and Micro Trend Trading. And Dr. Carr was also included some of the strategies that he hadn't published at the time. And I already told you, we decided to give you a part of that for free, and that was based on some pretty good feedback we had from one of our customers that got it in an unusual way. Dr. Carr, let's go ahead and bring you on here. Is there anything you'd like to say for yourself?
All right. Well, let me just start by saying thank you to Jeff. We've been working together for years and years now through the MetaStock Trend Trading Toolkit and the development of it, as Jeff mentioned, and we did some of that in his beautiful home at that point, living in the mountains of Santa Cruz, which was very near my hometown where I grew up. I grew up in Santa Cruz, California. And we've been working ever since, talking about the toolkit, helping users of it become familiar with the various aspects of the toolkit. It's as I understand it, one of the largest add-ons that MetaStock has. It's a very thorough piece of software. And we're going to be talking about it, but we're talking about the toolkit in the context of two specific trading systems that I'm very familiar with and fond of and have created. Those are two systems that I developed myself. And a little bit more about those in a little bit. We're also going to leave you today at the end with a stock that satisfies the parameters of one of the systems, my most profitable system. And it's a stock that you can go ahead and consider trading tomorrow. We'll talk a little bit more about that, though. There's a few bit of hints and tips we want to talk about before you take away the ticker symbol. So before we get there, let me just introduce myself a little bit. I am the founder and CEO of Befriend the Trend Trading LLC, which is the parent company of the Dr. Stoxx brand. And I want to give you a little bit of the backstory to the development of this toolkit and some of the systems that we'll be talking about today. I am not a financial professional. I'm not a financial planner. I'm not a certified market technician. I have no finance training. In fact, the only financial education I've had was one undergraduate economics class I took way back when. I have a PhD from Oxford, but it's in philosophy, not in finance. I'm self-taught, but I did place myself under the tutelage of a number of big names in the industry, including William O'Neill of IBD fame, investors.com fame, who wrote the book How to Make Money in Stocks, and Martin Zweig, who is a hedge fund manager, and a number of other folks in the industry, and I learned as much as I could from them. And then in 2002, as a hobby, I was a professor at that time, a full-time professor teaching philosophy and religious studies to undergraduates. But I turned a hobby into a small business when we launched our very first daily stock market advisory. It was called the Trend Trade Letter. And it's still being published every day. Here we are 15 years on. We've averaged 32% annual return on investment per year in that letter, which is, compared to the S&P 500, pretty good. And we did that for a number of years in a part-time kind of way until 2007, and then I got very interested in exchange-traded funds, which were still fairly new back then. So we launched our second letter, the ETF Reversal Letter, and that has averaged over 47% return on average per year. And then in 2008, McGraw-Hill approached me and asked if I'd like to write a book about trading, and I did, Trend Trading for a Living, which some of you may be familiar with. Much to my surprise, much to the publisher's surprise, it went on and became a big bestseller, translated into several languages and still selling quite well today. And of course that brought a lot of attention to our services, so we began to expand what we were offering. In 2010, I launched our third daily market letter, the Cheap Stocks Letter, and it averages a 62% return on investment, or has done so since that launch. And then McGraw-Hill asked for a follow-up book, so we came out with Micro Trend Trading, which is a book focused on more short-term stock trading. Trend Trading for a Living is focused on what we would call swing trading or position trading, multi-week holds in fast-moving stocks. Micro Trend Trading is concerned more with the intraday kind of trading, so very short-term holds. The Trend Trading Toolkit is based largely on these two books. So the systems in the toolkit mirror almost exactly all of the systems in Trend Trading for a Living and two of the day trading systems that you'll find in Micro Trend Trading. So those two books really form the foundation of what we've done together at MetaStock. In 2014, I launched a weekly letter, the Momentum Letter. It's been our most profitable letter to date, with the exception of a couple letters we just launched, and it's averaging about 82% return on investment. And in that same year, came out with a third book for McGraw-Hill, Market Neutral Trading. And in Market Neutral Trading, you'll find my most profitable short-term trading system called the mean reversion system. That is now coded into the MetaStock add-on, and it's one of the two systems we're going to be talking about today. And you're going to hear of a stock that satisfied all the requirements of that system that you can consider for trading tomorrow. So that takes us up to 2014, and then just last year we came out with two new letters and a brand new website. Dr. Stoxx Trading is our new website, drstoxtrading.com. And there we publish two weekly letters, the Hot Stocks Letter and the Penny Stocks Letter, and these are based on systems that I developed that the returns of which have just been phenomenal. They're systems that I've been using in my own private trading account, and I've been using them in the managed accounts that we offer, and they've done very well for us. And so now we're offering a subset of the stocks that pass through those systems to our subscribers. Hot Stocks Letter is averaging 157% return on investment per year. Now, some of those returns go back behind the letter itself because I've been trading this system longer than the letter itself. But the Penny Stocks Letter is just off the charts, 182% return on investment per year, and that's over the past 7 years. And so today, Befriend the Trend Trading is managing three different websites. drstoxx.com, that's our flagship site, the one we launched back in 2002, 15 years ago now. And drstoxtrading.com, that's our newest site. And then the ichthusletter.com was launched a couple of years ago. It's aimed at more long-term investing. So that's kind of a whole different animal. It comes out once a month. In any case, that's what I'm doing. And all of this got me so busy, I had to resign from teaching a couple of years ago. Now, actually, 5 years ago. Time flies. And we moved our family down to the beaches of Florida, and we just had a great time down here ever since. So life is good. but it's largely good because of what we've done in the wee hours of the morning, developing these various trading systems and teaching others how to do it. Our various sites offer webinars to people that want to learn how to trade, and we also offer of course, these stock pick letters to people that want to learn what to trade. But let's talk about us for a moment. Enough about me. Let's talk about what you're going to be learning in today's webinar. We'll talk first a little bit about the Trend Trading Toolkit and just kind of give you a brief overview of it, what it holds and what some of the features are of that. And then we're going to drill down into two of the strategies that are offered in the toolkit, and they do happen to be, I mean, they're selected for this reason. They're my two most profitable strategies. I should say they're my two most robust strategies, and by that I mean they're not necessarily the most profitable on a ROI basis, but they are the most robust in the sense that they do tend to do very well even in volatile markets. Their drawdowns tend to be much shallower than some of the other systems and strategies that I've developed. So they may not be necessarily the most profitable, but they are the most robust. In fact, I do believe my mean reversion setup system is the most profitable as well as one of the most robust. But you're going to hear about those two strategies, and then thirdly we're going to, didn't put this up in the PowerPoint, the pullback setup and the mean reversion setup are the two strategies we're going to be looking at. Both of those are in the Trend Trading Toolkit, and we'll look at those here in just a moment. And then thirdly, we're going to look at how to find mean reversion setups each trading day using the Trend Trading Toolkit, and then which mean reversion setup you should consider for tomorrow. And I'm delighted because the one that showed up on the scan today is one of my favorite trading stocks. This one is a fast mover. It's a reliable trading stock. Once it gets moving in the right direction, it tends to trend in that direction for several days at a time. And I think we can make some good money in that position going forward, as long as it gives us the right entry signal. And we're going to have to talk about that because it hasn't done that yet. So we'll see what it does tomorrow in tomorrow's trading. All right, so a little bit about the Trend Trading Toolkit that is offered through MetaStock. You're going to get, if you add this on to your MetaStock software, you're going to get 13 technical scans, all of which come from my 3 trading books. Now, most of these are found in my first book, The Trend Trading for a Living. There are 2 day trading strategies which are not listed here because those are actually strategies that you apply directly to individual stock charts. These are scans that you will apply to a whole universe of stocks to pull out from that universe the stocks that satisfy the requirements of the scan. So a little bit different approach, but you, in addition to these 13 technical scans, you're also going to get 2 what are called expert advisors, which you then apply to specific stocks, and you will do that for the 2 day trading strategies, which makes sense. In day trading, you're not scanning a whole universe of stocks for specific trade setups on the daily chart. You're drilling down into a specific stock or E-mini or forex. Now the toolkit can be applied to all of those things. You're drilling down into a specific trading vehicle, specific security, and looking for setups using that expert advisory on the specific security that you're trading. So you're going to get the 13 technical scans, you're going to get the 2 expert advisories, and a number of these technical scans come with their own expert advisories, so you can also apply these to individual stocks if you wish. Or you can take one of your favorite trading stocks and overlay it with the expert advisory for any one of these scans, and you can see all the signals that that scan would have produced going back in time. And of course, MetaStock has an awesome backtesting tool, so you can backtest any of these systems on any of your favorite stocks or on a basket of stocks, and that, of course, is a great way of seeing which are the best trading stocks per scan. And once you get into a specific exploration, or scan, system scan, you can open it up and you will have full access to the code that lies behind the scan. Now, not all add-ons in MetaStock software have that option, but Jeff and I decided that this was something we wanted to make available to those who purchase the add-on. And this allows you to get down into the scan itself and make adjustments if you want. You can raise or lower the volume requirement, for example, or you can use a slightly different moving averages, or you can use a different set or range of stock prices if you want to focus on lower price stocks or higher price stocks, et cetera, et cetera. So you can really tailor it to your kind of trading. And that's something that is offered with the Trend Trading Toolkit. And again, it's not offered in all of the add-ons, but it is in this one. And then the Trend Trading Toolkit also comes with 6 chart templates, and these chart templates are tagged to the specific systems that are in the Trend Toolkit. So if you're trading, for example, the Pullback system, which is one of the 2 we'll talk about today, you would simply overlay, or you would simply call up this Pullback and Relief Rally. Relief Rally is the short version of the system. Pullback is the long version of the system. And you would simply apply that to the chart, and it would give you the exact parameters that you need to determine the validity of the signals. Now, of course, stocks passing through the scan are going to satisfy the parameters of the scan, but it's always a good idea to take a good look, a good eyeball of each chart, just to make sure that it is in fact satisfying the requirements. And of course, every time you do that, you're going to see slight differences in the way the stock is setting up. And with a bit of training, of course, you'll have a good eye for what are the best setups among the short list of stocks that the scan allows to pass through. But anyway, those are the templates that you're going to get with the toolkit. Now let's talk a little bit about the 2 setups that we'll be looking at today. And this first one, I'm only going to briefly introduce because we'll be talking more about it in detail next week. If you are on this webinar, then I assume Jeff has mentioned this, but you are invited to a kind of second follow-up of this where we're going to drill down into the pullback setup, talk about its parameters. You're going to have access, in fact, to the full code of the system. And I'll be talking a little bit about when it's a great time to use the pullback setup and how to determine the best candidates that pass through the screen. So more about that next week, and hope you all can come back for that. But here I just wanted to introduce the system itself, and we're going to look at a good example of it, and in fact a pullback setup that you can consider trading tomorrow. And the pullback setup is a what we would call a continuation trade. There are continuation trades, there are consolidation trades, and there are reversal trades. This happens to be a continuation trade, which means we're looking at a stock that is already in a trend, that has paused in that trend and is ready to resume the trend, ready to continue the trend, and that's when we want to buy the stock. We're looking here to capture the next leg up in the pullback setup. The reverse of this system, which is called the relief rally system, it's exactly the same system, only the requirements are reversed, does the same thing for downtrending stocks. You'll have access to that in the add-on as well. So we're buying uptrending stocks after they have pulled back to some area of support, and we use 2 key moving averages to do a bit of trend analysis to make sure that we are indeed in an uptrending stock. And we also screen stocks in this system for volume. We don't want thinly traded stocks to pass through. We were looking for stocks that are trading at least 500,000 shares per day. We're looking for stocks over a certain price. I think the default setting is $5 per share, and of course you can change that if you prefer lower or higher price stocks. And we're also looking for stocks that have some volatility to them. So we don't want a relatively flat moving stock, a relatively low beta value stock. We want stocks that move far and fast because that's where, of course, that's where you're going to make the bulk of your trading income. You want stocks to move in the desired direction over this short period of time. You don't want to have to wait weeks and weeks to capture the bulk of the move. I mean, for example, Facebook has been a great stock for those who are holding it as an investment. It's just gone up and up and up all year long, and it's in a multi-month uptrend right now, and it's doing quite well. It's pulled back, of course, with all the tech stock selling off in the last few days, but the uptrend is still intact. But you know, Facebook is a massive market cap stock, millions of shares traded per day, hundreds of billions of dollars invested in the stock. It's a slow mover, a sluggish moving stock. A good month for Facebook is maybe a 3% gain. We're looking for stocks in this setup that trade 3% a day. You know, we want to see that 3% gain happen in a day or more. So that's where we have worked into the code of the system a filter that weeds out those low beta stocks, those low volatile stocks, those stocks that don't move very much on a day-to-day, week-to-week, month-to-month basis. We're looking for the big movers, and that's already coded in for you. And then lastly, we enter on a signal. We have to look for a specific signal, which we will find in the candlestick chart. And we're also looking for a specific signal on the stochastics indicator. Now, the stochastics indicator is a momentum, or what sometimes is called an oscillator indicator, which indicates when it's very low, it indicates that the price of the stock is trading near the low end of its trading range over the past X number of days. By default, stochastics are usually set at 14 periodicity, or 14 days in that look back period, that prior trading range. We're using a shorter term version of stochastics, but either one is fine. And we're looking for stochastics to dip below a specific number, which tells us that then that pullback in the uptrend has reached an oversold point. Now, we all know, if you've done trading for any length of time, that an oversold stock can become even more oversold. So we don't want to just buy it because it's down in an uptrend. We want to wait until we see a reversal signal, and that's our green candle day. So we look at the candlestick chart, we wait until the close of trading, preferably, and if the close is above the open, or if it's about to be above the open, if it's like, you know, 3:55 Eastern Standard Time and there are five minutes to the close and we've got a good healthy up day, then that's our signal to go ahead and enter that pullback. That's our buy signal. We've got the oversold stochastics combined with the green candle day in an uptrending stock. That's our buy signal in the pullback setup. I love the pullback setup. It is the very first trading system I developed, and I have been using it for days and days and weeks, months and months ever since. I should say, by that I mean, I don't trade it every day, because I have 30 some odd systems that I've developed over the years, and I rotate in and out of them as the market dictates. But the pullback setup is one I'm probably using more often than not. It's a go-to system for me. I call it my bread and butter system, because it has probably made me more money than any other trading system that I've developed, even though some of my other trading systems, like the hot stocks system or the penny stock system that I use, make more return. Over the 20 some plus years I've been trading, this is our bread and butter. This is the one that helps us pay the bills. This is the one that's about to buy out our mortgage. It's an amazing setup. This is the one that helped us move down here to Florida, by the way, from snowy Ohio, and we're very thankful for this particular system. So yeah, it's a robust, heavy mover system. I learned it way back from a fellow who I won't give you his name because he ended up in prison for some securities fraud, unfortunately. But he was a great trader, and he knew his technical analysis, and he taught me the value of the stochastics indicator and the value of using moving averages to determine trend. And the pullback is based on those two things. And of course, I've tweaked it over the years, and you're going to get the most robust version that I have to date in the Trend Trading Toolkit. Let's look at an example of the pullback setup in action. And here we have a stock, clearly an uptrending stock, right? You can tell by the slope of the moving averages. We have here overlaid the pullback chart template, which gives us a short-term moving average, that's your red line, a longer-term moving average, that's your blue line, and then your stochastics indicator down below. Stochastics indicator always has two lines. You have a solid blue line, which is your signal line, and then your dotted red line, which is your smoothed line. It's a 3-period moving average of the signal line. And we're not interested necessarily in crossovers of those two lines. We're simply interested in the signal line itself, the blue line, crossing over or below these two horizontal blue lines. That is what we're looking for in terms of oversold. And if we're using the relief rally system, then we're also concerned about overbought indications of the stochastics. When you combine the uptrend, as demonstrated by moving averages, with the oversold stochastics, with a green candle on the price chart and candlesticks chart, you have your entry signal. And we can see 1, 2, 3, 4, 5 entry signals here over a period of 6 months, 5.5 months in this biotech stock, which is about par for the course. You do get quite a few signals in this particular setup. And this is a great trading stock for the setup. I mean, you just can't get any more picture perfect than these. Now, I will point out that this one signal right here, if you had been using a very tight stop, might have been stopped out because it was a little bit early. It was a clear signal. Obviously, stochastics is down below our oversold line. And we do have a slight green candle here where the close is just above the open. And it did continue to trail off a bit from there until the 50-period moving average. That's your solid blue line here, where it formed a nice little base, nice 5-6 day base, and then began to rise higher from there in stair-step fashion. Now, I always recommend setting stops below places of support, so my stop would have been underneath the 50-period moving average. And the Trend Trading Toolkit, in fact, tells you where to put your stops. So you would open up the expert advisory for this system, and it would tell you where to put your stop. It would tell you where to put your limit order to get out in to bank a profit, and all of that is taken care of for you. Now, if you have trading experience, you might want to just refer to those and then decide for yourself where to put the stops and your target price. But if you're rather new to trading, then the toolkit will do that thinking for you. And it is based on those values for the stops and target prices, based on the movement of the price itself, the movement of the stock itself. So it's stock specific. It's not just a set percentage, but it works with the volatility of the stock. So it's a dynamic indicator for determining stops and targets, which is, of course, much more valuable than just setting a standard 8 to 10% stop loss and 20% target price, that sort of thing. So all of these are excellent signals. I think this one would eventually have been profitable after a couple of weeks of sitting through a small loss. This one took off right away. This one up here took off right away. And here's our new signal. This is today's trading, by the way. And why we have it on the screen is because it showed up in my run of the pullback setup this afternoon. And it just closed at a green candle. I was almost going to buy this toward the afternoon. You know, the market was selling off after the FOMC rate hike decision, and EXAS was also in the red at that point, and so I went on and looked at other things, and I'm kind of kicking myself that I did, because I missed a nice entry into the close. No worries, because I can always enter at the open. Unless it gaps way up, I'll probably enter a position at the open tomorrow, and I certainly would like to see I would certainly like to enter if the high of today is taken out. I don't know what the exact high is here on the price chart. It's going to be 32 something, 32.85 or so. If that high gets taken out tomorrow, then I'm definitely on board this as a short-term swing trade. So that's the pullback setup. Let's look at our second setup, and the one that is in fact more profitable on an ROI basis. Tends to have a little more volatility than the pullback setup, but nonetheless, it works very, very well over time, and I'll show you some statistics here in just a moment. One more thing about the pullback setup I would mention is that I would recommend trading it in conjunction with the relief rally setup. So that way you're going to get longs and shorts at the same time. And that's the whole thesis behind my third book, Market Neutral Trading. If you can really think of your account as a neutral vehicle, not necessarily net bullish or net bearish, but if you can always aim toward the ideal of being market neutral, then yes, you're going to diminish some of your returns in a strong bull market or in a strong bear market, but I think over time you'll be best served by trading both sides of the market at the same time. And we're certainly in a market right now that is not there are some very strong pockets of the market, but I think overall we're looking at a weak bull market, not a strong bull market, and it certainly has been under pressure lately. And this is a perfect example of when and why it's best to trade both sides of the market. So your pullback setup can be paired with its inverse, which is the relief rally setup, and your mean reversion setup is itself automatically paired. It comes in both a long and short version, and when you run the mean reversion scan in the MetaStock Trend Trading Toolkit, you're going to get both longs and shorts showing up from the same scan, which is cool. I mean, you don't have to run two scans, you just run one, and you'll get both longs and shorts showing up. The mean reversion setup is a reversal trade, or what you might call a contrarian trade. You're looking to buy or sell extreme moves away from the mean of chart price over X number of days going back into the past. And of course, that's what a moving average does. A moving average is the mean, and the moving average we use for this system is the 20-period simple moving average. So we're looking at the average price over the past 20 trading days, which is roughly a month, right? About a month of trading. And when price moves away from that mean to an extreme, what we're then looking for in the mean reversion setup is that the price has reached a point of equilibrium and is in an imminent return to the mean. Reversion to the mean is almost determined by that price point. So in general, our thesis is that we're going to buy extreme moves below the mean, right? An extreme move below the mean, which is an extreme sell-off in the stock or the index or the E-mini or the forex, whatever you're trading, that equals a buy. And an extreme move above the mean, above the 20-period moving average, equals a sell. Now, we can't just buy extreme sell-offs and sell extreme rallies, because that's a recipe for disaster, right? Never catch a falling knife. But we have ways in this setup of determining that critical threshold, that critical moment where the stock has reached its lowest point and is about to reverse. And there are all sorts of reasons why stocks do that. They go way, way up in price and it becomes overdone. And what tends to happen is that professional analysts and hedge funds and money managers understand the valuation of the company behind the stock. And when they feel it's reached a place of overvaluation, the price has gotten ahead of the actual value of the company, that the premium that investors are willing to pay for the future earning potential of that company has gotten, it is not being well served by the stock price because it's gotten too ahead of itself. That's when the reversion happens. That's when the pullback happens. And the same is true on the sell-off. There are some great stocks that get oversold because of panic, because of rumors, because people misinterpreted the CEO at the last earnings report. All kinds of reasons why stocks become oversold. And they're great companies, they're great stocks. They really didn't deserve that beating, and that's when the price reverts back to the mean. And so what we want to do in this system is catch that reversal, catch that point of threshold where the stock has gotten ahead of itself too much. And the system also screens stocks for volume, like the pullback, for price, and for distance from the mean. So we're looking for a critical distance, an X percentage distance away from the mean. That's our minimum. It can be more than that, but it has to be at least that distance from the mean. And then we also use Bollinger Bands in the system to give us a kind of objective way of measuring excuse me, when price has gotten beyond its standard deviation. Bollinger Bands are the two bands, one high, one low, that determine the greatest amount of trading range over the past X number of days, and we use a 20 period distance by default. So Bollinger Bands set a 20 period at a 20 period mean or moving average. We're looking at the bands themselves and putting a border around the trading range over the last 20 days, and that's more or less what they do. But when stock price starts to move outside of those bands, then we have some very important information about the trading of that stock that sets up the potential for a mean reversion setup. Because once a stock starts trading outside of its standard deviation, away from the mean, we have an unusual circumstance that we can exploit. And that's exactly what we're doing with this mean reversion setup. Okay, now let me show you a bit of statistical information about this system. This is not coming from MetaStock itself. I use a site for some of my systems building because it allows me to build systems here on a piece-by-piece basis. And then it backtests the system, and then I know whether this piece or that piece is working better. And I use this site for technical systems building, and I built into the system this very same mean reversion system that is coded into the Trend Trading Toolkit. And then I applied that mean reversion system over a 7-year look-back period and compared it to the S&P 500. And I'm applying the mean reversion system only to stocks within the S&P 500. So you're only trading stocks in the S&P 500, right? Big cap stocks, big blue chip stocks, stocks that are owned by all the index funds, lots of volume, not a lot of volatility in these stocks. These are very low beta stocks. Whenever any of those stocks experienced a mean reversion setup, long or short, in fact, I think this is a longs only. Yeah, this is the longs only version. And this is a very bullish period for the market, so the longs only version is likely to work better than the shorts only version. And here are the returns. So 7-year period, we had an annualized return of the system, the mean reversion system, of almost 17% per year, compared to well, you know what? I don't know. Sorry, I don't know what the S&P 500 did on an annualized basis, but the total return for the system was 196% versus 44% for the S&P 500. Now, that's a very good return. It's not huge. It's not anything to get too excited about. But if you look at the cash flow for this system, you can see that it is fairly steady. We have a few minor problems. You know, right here, this is the Great Recession crash of the market, and of course, everything went down during that period of time. And then we had a little flat period here, late 2012, 2013, when the market itself was pretty flat. You're not getting a whole lot of really quality mean reversion setups in a flat period of market. And then, you know, look at this really nice up ramp here. So our $1 million at the beginning of the time 7-year period turned into nearly $3 million over 7 years. Now that's a very nice return, of course, but let me show you what happens when we take the very same longs only mean reversion system and apply it to small cap stocks. Bingo, 213% annualized return per year over 7 years. Your $1 million becomes, what is this number? $9,640,616,000 over a 7-year period. That's a return on equity of 298,000% compared to a measly 44% for the S&P 500. Okay, that is the power of the mean reversion system. So moral of this story, apply this to small cap stocks. And you can do that in the Trend Trading Toolkit. You can tweak it to keep out large cap stocks, or you can tell the scan to only find small cap stocks, or you can say I don't want anything from the S&P 500, or I don't want anything from the Dow Jones 30. Those kinds of things. You can streamline your stocks. You can also say I want only stocks from the S&P 600, which is the list of small cap stocks, or the Russell 2000, which is also the small cap index. All right, small caps work very well. I also wanted to show you this. This was a system that I trained to always close out the position after 5 trading days, no matter what. 5 trading days, you should know this, 5 trading days is the maximal gain per day length of time to hold a mean reversion trade. You can hold them much longer and get much larger wins per trade, but your winning percentage per day will go down. You can sell after 2 or 3 days if you want, if you like real quick turn type trades, but again, your average win percentage per day will go down. 5 is your maximal percentage gain per day. And so if you want, I mean, I wouldn't recommend it necessarily, but you don't necessarily have to trade this with a stop and a target. I'll suggest how you do that in just a moment. But you can trade the system by simply using a time stop and setting a timed exit with your broker to close out the trade after 5 trading days. And when you do that, according to my statistics, you are maximizing your average gain per day with this system. And again, 213%, that's pretty good, pretty good. All right, now let's look at some examples. I have a lot of examples here. Oh, first the beautiful cash flow of this system. I mean, we can't even see the dip in 2008, but your $1 million becomes nearly what is it, $3 billion in 7 years. Not too bad. Of course, you're not going to be putting $3 billion into a small cap stock. You'll end up being a part-time owner, partial owner of the company. You don't want that. So you're not going to be able to make billions with this system, but you certainly have a powerful tool for improving your profit potential with the mean reversion setup. Let's talk a little bit about the scan itself. The key indicators, I've mentioned these already. The moving average, we use a 20-period simple moving average. We have Bollinger Bands set at the default 20-period and 2 standard deviations away from the mean, and a candlestick chart. And the key parameters in general are, we're looking for 2 to 3 days of strong selling below the mean, below the moving average, and a close at least 10% below the 20-period simple moving average, and it closed below the lower Bollinger Band. And keep in mind, these are all the mean reversion setup parameters for the long version of the system. If you're trading the short version, these would be reversed. And then we enter on the first reversal candlestick, which would mean the first green candle. Or you could even enter on a doji, I suppose, which is where the close and the open of the day are roughly the same price. That's fine too. That's technically a kind of reversal candlestick, but I usually like to enter on green candlesticks. And your exit can come in a variety of different ways. You can exit at the 20-period moving average, because that's really the target. The first target for this trade is to get back to the mean, reversion to the mean, hence the name. And it usually will do that within the 5 trading days. And usually the snapback to the mean is very fast. Sometimes you'll see it in a day. Sometimes you'll see it over several days. But it will get there one way or the other. It will either run straight up into the mean, or it will trade sideways, and the mean will pull down into it, and then you'll get that target met. If you wanted to hold longer term, you could exit at the opposite Bollinger Band. And most often you'll find you'll have to wait several weeks, maybe even a couple of months to get up there, but that will give you a much larger win percentage per trade, but of course it reduces your win percentage per day. You can exit after X number of days, and as I said, the maximal return per day is after 5 days. And of course you can always use a stop loss and a target price. So those are different ways of exiting the mean reversion trades. I want to look at a stock that unfortunately is no longer trading because it is was one of my favorite trading stocks, Intermune. I don't really recall what happened to it. I think it might have gotten bought out, but it's no longer available. But it's representative of biotech stocks, which tend to make very good candidates for the mean reversion system. EXAS is a biotech. It just happens to be in a very nice steady uptrend right now, so it's perfect for the pullback system. But a lot of biotechs will make some great mean reversion trades. And here we have a typical biotech chart where you have a lot of volatility, a lot of up and down moves. And when we add a little bit of structure to this, we start to look at some of the trends that are available in this setup. We can see that there are quite a few. We have up, down, big down, and then back up again. If there were only a way to harness the power of those driving moves up and down, we could make some good money from this stock. Well, that's what the mean reversion setup is doing or trying to do. Now, if you were to buy and hold this chart over the period of time that's indicated here, you would have lost about 7% over the 6 months of this time frame. But if you were trading this stock using my mean reversion system, you would have made 4 trades, 3 longs and 1 short. All 4 trades were profitable, and your total return for those 4 trades, 72.8% in 6 months. Not bad. I think I'd be happy with 72% from one stock in 6 months. Not bad at all. But of course, this is a prime candidate for the mean reversion system. And I'm also maximizing my entries here, and I'll show you how that works in just a minute. And you may not take the full breadth of the moves here in your own trading, but just to show you the profit potential of this system is really off the charts. So let's go back to this chart and let's add a little bit of structure to it. And by that I mean let's add the mean, which is the 20-period moving average. And we can see with this moving average we have periods of uptrend, downtrend, uptrend, and downtrend, as indicated by the slope of the 20-period moving average. We also can see that there are times when price really hugs the moving average and stays quite close to it, and times when it moves far away from it and reverts back into it. Those are the kinds of trades we're looking at. We're not looking at hugging a moving average either up or down. That's a trend trade. This is not a trend trade system. This is a reversal system or contrarian system. We're looking for moves that are going to snap back very quickly into the mean, having moved away from it to a sharp degree. Having moved away from it, we're looking at getting back into it, snapping back into the mean. Having moved way above it, we're looking at price to snap back into the mean. Having moved well below it, we're looking at price to snap back into the mean. We do that most profitably by overlaying the Bollinger Bands. And the Bollinger Bands give us a very objective way of determining when price has moved a significant distance away from the mean. And it has done that in several cases, because we can see here this area where price has traded outside of the mean after selling off for 3 days and then reversed back up. That's our entry signal right there. Away from the mean 3 days, reversed back up, entry signal. Well above the mean for several days, reversed back down, entry signal. Reversed back down, entry signal. Well below the mean, reversed back up, entry signal. And so those are that's kind of the gist of the mean reversion system. Let's look at how to find these systems. There are our signals. Let's look at how to find these setups. Sorry, using the Trend Trading Toolkit. So very simple. You would simply select the long-short mean reversion scan, and then you would have to decide what you're going to apply this scan to. Are you going to trade stocks? Are you going to trade futures? Are you going to trade, forex or commodities or whatever? And so you would limit the universe of securities that you're going to apply this scan to. I usually apply my setups, my system scans to this universe of stocks right here, all optionable stocks. There are 4,200 stocks, almost 4,300 stocks in that universe. These are stocks that tend to be fairly well followed, liquid stocks. If they're trading options, then they've got something going for them because there's investor interest in them, professional money interest in them, analyst interest in them. So that's a pretty good subset of stocks to start with. So I usually select that. And then you'll also see that each of the scans comes with an explanation of what the scan is about. You'll get a little bit of a narrative of the thesis of the scan. And okay, we said that already. You're going to select the universe of the stocks that you want right there. Behind the green bar here is the code for the system. And as I said, you can get into that code and determine any sort of tweaks that you'd like to make to it. And then as far as running the scan itself, you would want to determine how many stocks you want to show up in your scan. Now, you're never going to get 1,000 stocks passing your trading system. In fact, whenever I run the mean reversion scan, it's a pretty good day if I'm getting about a dozen. 5 or 6 longs, 5 or 6 shorts. That would be a typical average day. And it's fairly true for most of the other scans. You're going to find some of them work well in certain market conditions, and some of them just don't pass any stocks during certain market conditions. And that's fine. That's why you have 13 scans to choose from. You're going to usually toggle this on, which means you're going to be scanning today's data. But if you wanted to look back into the past a bit, you can fiddle with this date here. Maybe you want to say, I want to look at mean reversion setups that took place 2 weeks ago, and let's take a look at those and see where they're at now. Let's see how well this works. That's usually a good way to determine how robust a system is. Go back into a period of time when the market was doing something unusual and see, how did my system do back then? Of course, we'll be selecting the daily interval here, but this is a scan that you can apply to intraday charts if you wish, if you have the real-time data from MetaStock. And then you would just simply click this button down here, and you're off and running. And once that button is clicked, it will take, depending on how fast your internet is running, take you a little bit of time to come up. Usually it's less than a minute on my end. I have the high-speed cable access, and it depends on how many stocks you're running and how sophisticated the scan is as well. Sometimes it's just a few seconds, and you'll come up then with a list of stocks. So good, you're good to go at that point. Now, let's say you come up with a dozen mean reversion setups, or for that matter, a dozen pullback setups, and you don't want to trade all of them, of course. You don't want to just blindly buy everything on the list. How do you decide the best from the rest, the most likely candidates to make that reversion back to the mean? Well, I have some suggestions for you here. There are certain parameters that you can look at. And by the way, in my and I'm not plugging my book, but in the third book, Market Neutral Trading, I do discuss the mean reversion system at length, and we go over this list in greater detail, and even more detail in my mean reversion manual. And if you're really interested in the system, then I would suggest doing that. If you subscribe to the Momentum letter, you'll get that manual for free. But sorry, not the Momentum letter, different letter I'm thinking about. Sorry. But anyway, we do offer that manual for free with some of our subscriptions, but you can buy it from our drstoxx.com site. If you're really interested in this manual, in the system, you might want to drill down into some of those particulars. But here are the things that we're looking for when we are sorting out the best from the rest. We want to see that current price is trading at a level of support if we're going long, or resistance if we're going short, right? Technical analysis 101. Buy support, sell resistance. That's your mantra right there for this system. Now, not all of the stocks that show up on your list are going to be anywhere near support, because they've been selling off and they're down below every feasible means of support. That's probably one you want to avoid for now. Those kinds of stocks, it's not necessarily that they'll keep on falling, but they tend to languish in a sideways basing pattern, and they can do that for weeks, even months at a time. That's not what you want. You want a fast snap back to the mean, and that typically happens more often when the price has pulled back to an area of support. That can be moving average support, it can be a prior price high, it can be a prior priced low, it can be Fibonacci support if you're into that kind of thing. I'm not, but some people are, and that sort of, and all that stuff. So the variety of ways of looking at support. And we could also look for bullish, or if we're going long, or bearish divergence if we're going short in one or more of the indicators. So put on like the CCI indicator or the RSI indicator and see if at this lower low we're seeing a higher low in the indicator. That would be bullish divergence. That would be a very positive sign that we're going to get a fast snapback. You want to look for above average volume on that day that pushed price below the pushed price below the lower Bollinger Band and pushed price beyond 10% below the 20-period moving average. That's kind of our signal day -1, and that's a key day for seeing high volume. We want that panic selling to factor in, because if everybody has sold, then there's nobody left to sell the next day, right? Only the buyers are left. And so the high volume sell-off day followed by a reversal day, a green candle, is a good sign for a fast snapback. And then lastly, and not everyone is into this kind of thing, I am, but you can do a little bit of fundamental analysis. If the shares are now way undervalued, if they have a low price to sales ratio under 1, for example, or a low price to book, or if they've got a lot of earnings growth and people are saying, hey, this is a great growth prospect, then that can help. The fundamental factors don't weigh too heavily on very short-term trades like this, but they are a factor, and my studies show that particularly the valuation metrics can give a lot of support. They tend to reduce drawdowns in the system, and they tend to add a little bit of extra return on investment to the system. those, especially the valuation metrics. The price to sales ratio is a good one. The PEG ratio is also very good. Price to cash flow, free cash flow, is another good ratio to look at. Okay, now let's do a little bit of testing here. We're almost done, and I'll let you go in just a minute, but let me just give you a bit of a test here. This is an older chart of Herbalife, HLF, right? You're probably familiar with the company, and of course Bill Ackman has been trying to pull the price down, and it keeps going up and up. It's been a disaster short for him. Here it is trading in the 50s, and it's now in the 70s, but I'm wondering if you can spot on this chart 3 mean reversion trading setups. And I'll give you a hint. There's only one long on this chart, and there are 2 shorts. And let me see if you got them. Okay, if you got them, you get an A. You get an A for this webinar. And drop me an email, because maybe I've got a position for you in trading my managed accounts. Here are the 3, and I'm hoping you got them. We're looking now, remember, for a 10% move above the mean, which is a 20-period moving average. That has to happen first. And then we're looking for some sort of a reversal candle. This is not quite a reversal candle, but the next day is. It's a reversal candle in the sense that the stock lost money on that day, but the open is below the close, so that meant that bulls are still somewhat in charge of the tape. But on the very next day, we get that reversal candle right there. And of course, it pulled back very sharply over a period of 2 to 3 days back into the mean. Here's another clear 10% move well above the 20-period moving average outside the upper Bollinger Band. And then we have this big slam right here, which precipitated, after a couple of choppy days, another move back into the mean. Here we have a long sell-off, right? 7, 8, 9 days in a row of selling takes us outside the lower Bollinger Band, more than 10% away from the mean. And then we had this nice big bullish rally, bullish engulfing candle, and that would have been our entry ticket. And we moved back into the mean. We went beyond the mean to the major moving average, the 50-period moving average, and we even tagged the upper Bollinger Band on that particular trade. You can see, for example, if you went short up here, you could have covered half of your shares here at the 20 and then held the other half and covered them down here at the lower Bollinger Band. And that's a nice way of playing these kinds of trades. Bank half at the mean, which is your initial target and the one that you're most often going to get, and then bank the rest only when it hits the lower Bollinger Band. But I would say that you probably would want to make sure that you do take a profit on that second half of the trade. So don't let it turn into a loss. Make sure you cover it before it does that. The same would be true of this long down here. You would have entered down here around 47. You would have sold half your position at 49.50, and your other half would have been sold at 53.50. Nice little trade over a period of 4 or 5 days there. Now, I want to point out that there were 4 spots on the chart that might have thrown you a little bit. You might have said, oh, this is a setup right here, and this is a long setup here, and this is another short setup here, and you would have been halfway right, but what we didn't get in any of those 4 cases is a distance away from the mean of more than 10%. So if you did the math, you'd see it's very close in this one in particular, but it's not quite there yet. So that's what's wrong with those potential setups. So those 4 good setups, sorry, the 3 good setups totaled a gain of over 30% in 16 trading days, and that was simply holding back into the holding for the 5-day period, right? That's your maximized percentage gain per day. Buy and hold over the same period, you would have been 70 days in the trade. You only would have made a little less than 2%. Not bad, really. 30% gain in 16 trading days is 475% annualized. If you can't make a living on those returns, you're not doing it right. So, great robust system here. And let's look at some more charts. Here's a signal on a mining stock, CDE, which returned over 10% in 8 days. and we can see we're well below the mean outside the lower Bollinger Band after several days of selling off. We get a reversal candle right there. We'd have 3 days of sort of holding in sideways motion, and then boom, right back up into the mean. Here is a 15.9% gain in 6 days in natural resources. Again, multi-day sell-off below the lower Bollinger Band. We're well beyond 10% below the mean. Well, we're just about 10% below the mean. We get our reversal candle. That's our entry signal. Boom, back up into the mean for a nice trade. ATK, I'm not sure if this stock even trades anymore, but for a while it was a very volatile stock. Sold off well below the period moving average, outside the lower Bollinger Band, reversal candle right here, boom, back up into the mean. Now, here is the stock that I wanted to recommend for tomorrow's trading. We have a beyond 10% move in REN, the name of which is escaping me, Resolute Energy. It's in the oil and gas space, and oil and gas sold off big time today, and it's been trying to, I mean, it does follow the price of crude to some extent, but if you look at the chart, the overall chart of REN, it's in a very strong bullish uptrend, whereas oil is not. Oil is down at multi-month, even multi-year lows. What I like about this, though, is that we're well beyond the lower Bollinger Band. We're beyond 10% in this move. If we had volume on the chart, you'd see this was a heavy volume day, and we're down at a place of support. We're down at a place of prior price support. That is big time alert on my watch list. Now, what is the thing that we need in order to enter this? We need a reversal candle. So watch tomorrow's trading. If we get a close above the open, any kind of a green candle, even if you get a doji down around this area around 35 or below, and it doesn't have to be there, it can go up a couple of points. It can go up to 36, 30, 37 even, and it would be a valid entry signal. Then you would want to buy near the close or at the open of Friday's trading for that particular trade. You can hold it for 5 days and exit regardless. You can exit at the 20 period moving average up here around over 40. You can wait till it hits the upper Bollinger Band up around 44. You can sell half at the 20 and half at the upper Bollinger Band, however you want to do it. But I would certainly set a stop loss below this support line, you know, down maybe below 33 or around 33 and a half. And I would certainly exit after 5 days if it hasn't gone anywhere. If it's not moving back up after 5 days, I would be out. I'm pretty full up in my trading account today. I added a couple of new positions today, so I'm not sure I'm going to be able to get on board this one, but I might buy a few calls or even sell some 34 puts on this, short-term puts. REN is a great trading stock. You want to have it on your list, and it's looking good for tomorrow. So you've got two stocks for tomorrow. You have a pullback set up in EXAS, and you want to make sure that it's moving in the right direction first before you enter, and you want to see that we get a entry signal in REN per the mean reversion system in tomorrow's trading. So that's it for today. I'm going to just leave you with one last note here. If you go over to drstoxx.com and if you type in this code half off in the discount code box at checkout, in the checkout box, you will be able to take 50% off your first monthly or quarterly payment to any of our stock subscriptions. And I also invite you over to our brand new site, Dr. Stoxx Trading, for the Hot Stocks letter, the Penny Stocks letter, and we've got a really nice bundled discount if you want to order both of those. And then with that, I'm going to turn it over to Jeff to close us out. Thank you, Jeff.
Hey, Tom. Thanks. Do you have time for a couple questions?
I do. Let me just, I have my 6-year-old son standing right here, and he has to ask a question. So let me let him ask the first question, and then I'll get to the rest of you folks in just a moment.
Okay. One of the questions was asked early on, and you might have covered this, but do you ascertain reward risk before you place your orders?
Yes, and I always recommend that you want to have a good understanding of where you would see this stock maximizing its profit potential. That would be your target price, and where you would exit the stock if it moves against you, your stop loss or your maximum loss. The Trend Trading Toolkit, of course, does that for you because it will give you, at least for most of the systems, it will give you the best stop loss to use per the stock. So it's a dynamic value based on the volatility of the stock. And it will also give you the target price. And so you can simply take the target price and the stop loss price, and you can make a ratio of those and then sort by that ratio. The best ones that rise to the top will have the best profit to potential loss ratio, and you can go from there. So yeah, that's a great question, but that's how I do it.
Okay. Here's what Dr. Carr was talking about, just to kind of build on that. This is a chart you might have heard of. Google had a bit of a long pullback back in February, actually. So this was a little bit of time ago. But here you're going to have the suggested entry price, your percentage stop loss, your ATR stop loss, and your target exit price. And so you've got a stop loss. Generally, Dr. Carr, do you find you go with the percentage stop loss or the ATR stop loss?
Yeah, the ATR stop loss is the dynamic one I've been mentioning, and that's the only one I use. So I would recommend going with the ATR because that's keyed to the stock itself and its historical volatility, and you're going to get something that's much more appropriate to the way the stock has been behaving. And in many cases, you'll end up saving money on a stop out because it tends to give you a little more a tighter stop than the actual standard percentage stop loss, especially on a rather sluggish moving stock like Google.
Awesome. Question 2 from Caesar. What market conditions are good for a mean reversion setup?
Well, you will find that's a great question, very good question, and you will find mean reversion setups in every market condition, which is a good thing because in every day you're going to get stocks that have been hard hit for news reasons. You're going to get stocks that are rallying hard on some story or rumor or news that has come out recently, and things just get overdone. So fortunately, on a stock by stock basis, every market will provide viable, great mean reversion setups. But if you're looking at trading the mean reversion setups on indexes, then you really need to be in a much more volatile market than the one we're in now. We're in a very quiet market. We've had the VIX, under 10 for long periods of time, which is almost unheard of, and certainly under 15, which references a quiet market period, a complacent market period. Whereas the mean reversion setup, you'd probably want to trade it on the indexes, on your ETF trades at a higher VIX, so maybe something like in the 18 to 20, low 20s. When it gets up there, you're going to find a lot of good mean reversion setups on the major indexes.
Last question. Charles asks, how do you use your setups with forex if there's no volume data?
Great question, Charles. Well, volume data is only used to weed out those thinly traded stocks. So we only use volume as a way of limiting our pool of stocks that we're drawing from. And of course, forex is one of the most heavily traded securities out there. So in any of the pairs, any of the major pairs at least, it will not be a problem in terms of volume. So we don't even need to worry about volume with respect to the forex. They're all good.
Yeah. End of questions. Thank you, Dr. Tom. Great job today, by the way. I do want to just kind of talk a little bit about the toolkit a little bit. It is a massive application. It has about 11 setups in there. Here's a list of the long setups that we gave. Obviously, just for coming today, you're going to get this pullback setup, courtesy of Dr. Carr. And but if you want to get all of the setups, all of the scans, all of the explorations, you can also buy the toolkit, which is also very, very fairly priced. Here's a list of the short setups that are available. You have the long and the short and the mean reversion setups. and about 11 total systems. And when I mean systems, you get the expert advisors, which are exactly what you're seeing here, where it kind of identifies the setup on the chart for you, tells you exactly what that is looking for, and gives you your suggested entry and exit prices. You get the scans, you get the exploration, so you can scan through your universe of stocks, whether that's forex, whether that's ETFs, whether it's optionables. Heck, even if it's outside of the U.S., you'll be able to find a list of the stocks you're interested in and be able to scan this. It's very, very good for doing that. We also get the pre-built chart templates, which just means you don't have to mess around with kind of putting those charts together. They're put together for you. And I already showed the commentary, but I thought he did a really good job with helping me kind of create and craft that commentary. What I like with commentary, particularly, and I'm a big fan of the commentary, but it gives us the ability to kind of, you only have about an hour or so with Dr. Carr at a time, but this allows you to kind of see what the blueprint for that model is and get suggestions directly from him about where you should look to get in and where you should look to place those stops. And that way you're kind of not making those judgment decisions on the call. I took this, once we had this product done, and I actually sent it to a person that we worked with very, very closely at Stocks and Commodities magazine, and had him do a review. And he had a lot of good things to say about it. All in all, this is a very worthwhile add-on. It's very reasonably priced and has real profit potential. And then just recently, Georgia and India, which if you're here for the kind of the prequel, you heard that whole story, but just talked about how I just recently purchased a Dr. Stoxx Toolkit. He's been using MetaStock for a long time, and please accept my sincere thanks and appreciation for this great add-on. I'll never hesitate to recommend it to others, so he just recommended it to you, basically. The cost on it, this is a one-time cost. It only costs $399. As part of being here at the webinar tonight, we're going to give you a $299 price. Now, it does require MetaStock to run, so you do need to have a copy of MetaStock with it. If you don't have a copy of MetaStock, and I understand about 53% of you don't here tonight, we'll actually throw in a free trial. And we're not going to obviously talk a lot about MetaStock, but one thing I will tell you about MetaStock is in Stocks and Commodities magazine, it's been rated #1 by the readers 23 years in a row. So that's incredible. It's a very, very established brand. It allows us to go in and put all these cool methodologies, do the scanning. It's the engine that kind of runs everything for you. Okay. If that's not enough, we're also going to be putting together a special Getting Started Bootcamp, and this is going to be next week, June 21st, next Wednesday, to be precise. We'll run that at the same time, 4 o'clock p.m. Eastern, and in that, it's going to be basically 2 parts. Dr. Carr is going to sit down with you and kind of talk a lot more about his methodologies and kind of recommendations and kind of common sense stuff. And for those of you that are new to MetaStock, I'm going to kind of go in and take a very step-by-step approach of showing you how to actually run the scans, showing you how to manage the data, showing you how to apply the templates, the expert advisors. We will record that. We'll make it available for basically everybody that's bought the add-on. But to attend live, you need to sign up for the add-on and get it on our 30-day money-back guarantee. If you decide within a month that this thing is not helpful for you, you're not out anything except for your time you spent to evaluate it. I'd recommend you try it. To take advantage of the offer today, give us a call. You can call us at 800-882-3040, or you can visit us. I'm having a problem with the English today. metastock.com/befriendthetrend. And that's what I wanted to say about that. I want to thank you guys for coming today. Appreciate it. Thanks for those of you that use MetaStock. And let us know if there's anything we can do to help. We'll see you next week, hopefully. There's a few questions that came in. Let's make sure that we go ahead and answer it. I previously purchased the toolkit and noticed the afternoon trade is not in there. How much would it cost to bring it up to date? Travis, what you need to do is you just need to go to metastock.com/downloads, I'm sorry, metastock.com/mydownloads, and you can download it for free. There's not a charge for the update. Okay. Jack, I'll get that freebie toaster and out to you. And give us a call. We'll help you go ahead and get signed up for it. Thank you for your interest in signing up for it. And thanks for coming tonight. And with that being said, good night, everybody. I'm going to go play with my girls. And my daughters, I should say, just so you don't get the wrong idea there. Have a great night, and we'll see you at the next event.